Hi, do you wish to know with a fair amount of certainty as to how much a tradable security, a stock, an index, a commodity, a currency, or maybe a derivatives contract can, I'm using the word can, go up or go down by exactly or roughly how many rupees or how many points? If you are interested in gauging the possibility of the upward or the downward potential in a stock on an intraday basis, join me in this video wherein I share a very simple trading hack used by professional traders to simplify and yet energize your trading experience on an intraday basis. I'm Vijay Bhambwani, a professional trader with 35 years of trading experience, 28 of which was spent as a founder, promoter, and CEO of an incorporated limited company which trades for a living. I will not ask you to buy any financial products or services or entice you into joining any of my webinars. This is without any commitment or without any offer. Friends, if you're interested in getting more such advice, please subscribe to my YouTube channel. Click like on this video if you like. That is what the only commitment or only engagement that I seek from you. In the comment section, do let me know what you think of my videos. And if you like the videos, I would request you to share them with family and friends. So let's dive right into the matter at hand and see how you can gauge as to how much any tradable instrument can rise up or go down by. On your screen is a very simple table. I have taken a 10-day average, which should be fairly good enough for any kind of a trader trading on a day-to-day basis. If you're a swing trader who takes an exposure overnight, maybe for 1, 2, or 3 trading sessions, maybe you would want to take a higher time frame. For example, 15 trading sessions or maybe 20 trading sessions. I'll come to the logic later. Now you see what I have done is taken the intraday range, which is the intraday high minus the intraday low, which means how much any traded counter has moved from up to down. That would be the range per day. I add this 10-day period and divide it by 10. So I get an average of rupees 12. Now this 10-day average of 12 rupees should be approximately, I'm using the word approximately, by how much you can expect any particular counter which has been calculated for 10-day average should either go up by or go down by. Now, what is the significance of this? If you're basically wanting to fade means go against. If the stock or say a commodity is rising up and this 12 rupee point is what you've calculated based on a 10-day average, you can attempt to go short when the stock has moved up by 12 rupees, provided the screen warranties it. Remember in my previous video, LTQ versus the ATP, the last traded course versus the average traded price. That video will explain to you what I mean by screen reading. Provided those signals also match, number one. Number two, what if that 12 rupee move up coincides with a moving average which is upwards, which will provide a resistance point? What if this 12 rupee move up coincides with a previous top? So that makes it a double top. What if this 12 rupee move coincides with a Fibonacci level that basically fortifies the strength of this signal, which makes this signal doubly more effective and therefore that much more powerful. Now, if you go short there, you would place your stop loss marginally above this 12 rupee level and wait. And as soon as the price starts to fall, you will start to trail your stop loss. So if the price falls by 50 paise, you will trail your stop by 50 paise. So that at some point in time, even if you were to get stopped out because the price whipsawed upwards, you will not lose money out of your pocket. The reverse would be applicable on the long side. If the stock was to fall 12 rupees and if there's a moving average support below, a double bottom or a previous swing low support below, you could attempt a buy. And then you would basically keep a stop loss somewhat below that 12 rupee move and keep trailing the stop loss higher and higher in tandem with the price. Remember, you must have corroborative or supporting evidence from the screen and the snap quote window, which you can get by clicking on F5 after highlighting the script that you are monitoring. Can the script move beyond this 12 rupee, and if so, by how much? Remember, if you've seen any of your brokers' videos or analyst pivot levels for an intraday basis, there is R1, R2, resistance 1, resistance 2, S1, S2, support 1, support 2. So the first level you will take is the closing plus this 12 rupee or minus this 12 rupee. So that will tell you the upside and the downside potential. And if the intraday high and low is beyond the close, say it is 2 rupees higher and the low is 2 rupees lower than the closing price. So you can take this R2 or the resistance 2 will be 12 rupees plus the high, and support 2 will be 12 rupees minus the low. This will give you two levels. Resistance 1, resistance 2, support 1, support 2. Fairly simple, isn't it? It will work in routine markets. If the market is going crazy the way it has of late, maybe it will give you somewhat of a limited success. But still, 6 to 7 days out of 10, this system should work. So possibly when the markets have calmed down after the budget, say 8 to 10 trading sessions after the budget around 12th to 15th of February, you should give this system a shot. You know where to find me. Give me a shout if you have a problem with this system. On this cheerful note, I bid goodbye to you. Do take very good care of your trades and investments. Have a very, very profitable day. Vijay Bhambwani signing off for now. Thank you for your patience. Thank you for watching me. See you in my next video. Bye.